And the only way to finance debts in such a situation and to get people to actually commit money to buying treasuries, that's by starting a war. Then you can raise more money.
Ladies and gentlemen, welcome to Egon von Greyerz. Time for our monthly von Greyerz interview. Egon, great to see you. Finally, everything happens what we were expecting in a really deteriorating environment. Nevertheless, good to see you. How are you?
I'm very well. Thank you very much, Jan. And yes, good to be back. There'll be a lot to talk about, not just today, but for the whole of this year, I think, Jan, because it's happening gradually, but still slowly. But there will be some major events coming later during this year, I'm quite certain.
I heard once this telling slowly, but then suddenly. Egon,
Yeah.
one thing of many came true. The inflation persists or remains higher than anticipated. Let's begin with that. Inflation in the US, as measured by the change in the CPI, rose 3.2% on a yearly basis in February from 3.1% in January. The BLS reported on Tuesday annual core CPI, which includes volatile food and energy prices, increased 3.8% in the same period, below the January increase of 3.9%, but above the market forecast of 3.7%. And I continue with this here. The producer price index for final demand rose 0.6% last month after advancing by an unrevisioned 0.3% in January, the Labor Department's Bureau of Labor Statistics said on Thursday. Economists polled by Reuters had forecasted the PPI climbing 0.3%. A 1.2% jump in the prices of goods accounted for nearly 2/3 of the increase in the PPI. Goods prices were driven by energy products, which surged 4.4% after declining 1.1% in January. Egon, it seems exactly what we were expecting happens. The inflation comes back. It remains stronger than the politicians and the Fed obviously thought. And yes, as we said, what came out of the bottle is not going to go back, right?
Yes, this talk about, well, first of all, as you know, when inflation was under 2, they said they wanted up to 2, and then he went up a lot higher than 2, up to 7-8% in most countries or more. And then they say they're going to put it back to 2 again. They have got no tools to change inflation. This is political or events outside their political sphere that actually makes inflation move. The interest rates have a very only nominal effect on inflation. So they think now it's going down to 2% again. Of course it isn't. My strong view is that inflation will remain high on a global basis together with interest rates. And this now, of course, excluding food and energy is ridiculous also in these figures because that's everybody eats something and everybody uses fuel. And they're a major part of most people's spending. So we have a temporary reduction in inflation, although last month, as you said, it was higher. But you're still talking about annualized. If you take 0.4% for the month, I mean that's still almost 5% for the year. So it's still much higher than they intended to be. Inflation is here to stay on a global basis. Commodity prices will continue to go up, food prices will go up, and oil and fuel in general will also continue up. So the whatever reduction we've seen now is not going to last.
But at least, Egon, they use these higher inflation numbers to increase the fear that the Fed might not lower the interest rates as expected. They are still playing the market. And I have here an interesting observation in an article by Zero Hedge, Egon. The ETFs that used to accumulate gold, they continue to lose gold while the gold price is rising. We are close to a record high. In my view, Egon, a very strong development, and I think it shows there is a good chunk of distract into those vehicles. We see here the gold price increasing, obviously, and the holdings, the ETF holdings decreasing, continue to decrease.
This is a very bullish sign. You know, you have then funds and ETFs who have been selling gold since 2000, middle of 2000, and in spite of a rising price. You know, they're totally on the wrong side of gold, but of course the main buyers of gold currently are the BRICS countries and the central banks, and they are obviously ignoring what investors are doing short term. There will be a point when all of these funds and the ETFs will turn around, and once they turn around, you know, they will be with the trend for a change now, which they haven't been for the last 3-4 years. And that will obviously put more fire on the gold price. So, you know, that development, I think, is what we're seeing, those two graphs are very bullish for gold. Gold is at a high and nobody's buying it, except for, as I said, BRICS and the central banks. That's an extremely bullish sign. And of course, the central banks, when they buy gold, they don't buy in the market, they buy off market always. So though they don't even, they only influence the price on the margin. Still, as I said, there's not so much gold around, and what is now available for purchase for these central banks in the BRICS countries is putting upward pressure on gold, and that's just the beginning, Jan. It's just the very beginning.
Another very interesting graph in this article, Egon, we know that the crypto and especially Bitcoin had an incredible bull run. Let's see what happened. Obviously, many new ETFs were registered or allowed to start trading, and that drew a lot of money into Bitcoin. We see here ETF flows and the repetition of what we just saw, the outflows in gold. And nevertheless, the gold price is rising, although we saw this big distraction and the inflow into Bitcoin, another very strong sign for this gold bull market to me.
Well, you know, this is a totally different market. And now, of course, since Bitcoin is continuing to go up, now banks have to get into it, funds have to get into it, and ETFs are created for Bitcoin. I'm still of the same opinion. It's a wonderful speculative vehicle, serves no purpose. It doesn't, from the point of view of replacing gold. It'll never replace gold. It's just an entry on a computer. That's all Bitcoin is. It's got no intrinsic value. Gold has intrinsic value, and remember, half of gold production is gone into jewelry, and some goes into industrial. So, you know, we have the history of gold. So also, which is 5,000 years old against 14 years of Bitcoin. Bitcoin, you know, fantastic for the people who invested in Bitcoin, made a lot of money. My target is still, it could be $1 million or it could be 0, because what central banks decide to do. And therefore, it's not a good investment, and it's a high risk, and it's incredibly volatile, not suitable at all as money or as a replacement for gold. So good luck to the speculators, and I hope they make a lot of money, and I hope also that they get out at the right time. But anyway, it's nothing to do with wealth preservation, as we've always been saying. Jan.
At least some competition for fiat money, but the litmus test still has to come when there is a hack or a big blackout. We will see what happens then. The gold you have, the real gold, is something completely different. But let me come back to this article, Egon. There is another graphic that I'd like to show. This one I read. When gold rises in your currency despite positive real rates, the gold market is saying your government will have a debt spiral if real rates remain positive. And amazingly, Egon, we had a long time correlation, a clear correlation here between gold and real rates. If this catches up, the real rate has to come down big time, which on the other hand means they have to lower the interest rates, right?
As you say, normally gold goes up, and we can look at that since the 70s. I remember the 70s well. You know, there was negative real rates, which means that negative real rates means that inflation is higher than interest rates. But now we have a situation when interest rates are actually higher than inflation, which is very, very unusual for gold to rise. But that means that gold is really now signaling there are real problems in the world. Gold is not going up because of technical factors like positive real rates. They're going up because of geopolitical factors, and they're going up because of economic factors and the fact that most countries are running deficits and increasing debt at an exponential level, debts that can never be repaid. And this is why now the world is worrying about what's going to happen to the world economy and to money. Money will have to continue to be debased at an accelerated rate, which means that your money, as it always has done, will go to zero against gold. This last fall started, as we both know, in 71 when the gold window was closed, and now we're down 97 to 99% all currencies against gold. That is real money, and we have the last bit to go, and that is what we're seeing now, and that's why gold is going up. It's not gold going up, of course. It's the value of money going down. And people who don't understand that, they will lose out. They will actually not or miss out on protecting themselves by buying gold at reasonable prices, because at some point it'll be very hard to get hold of gold at any price because there's a finite supply of gold.
The majority will miss it, Egon, as always. And there is another interesting warning sign. We talk on a regular basis also about the stock markets. They are still high. Something smells there. Okay, they are driven by AI stocks, but some mighty insiders are cashing out. Jeff Bezos sold Amazon shares worth of 8.5 billion in multiple transactions this month. That was in February. Meanwhile, Jamie Dimon, CEO and chairman of JP Morgan Chase, sold 150 million in stock last week. His first cashing out since taking the top job at the bank 18 years ago. Around the same time, Leon Black, co-founder and former CEO of Apollo Global Management, shed 172.8 million in stock, also a first ever stock sale. Similarly, the trust for the Walton family, heirs of Walmart's founder, sold 1.5 billion in Walmart stock this month. Again, that was in February, but at least a small sign that they take precautions, while Joe Sixpack is still fully invested.
Well, you know my view about the stock market, Jan. The stock markets are at most incredible levels, bubble levels. I think that during this year, and you never know when it will happen, but during this year, we will see crashes in stock markets around the world. They're overvalued dramatically. The US market is being carried by 7 stocks, mainly tech stocks, but you know they are the Amazons, the Apples, etc., Google. Otherwise, the US stock market is not going up. And at some point, we will have the reversal, and that will take everyone by surprise. And this is why some of the clever investors that you're showing, who understand what's happening, they're cashing in. They're right to cash in, because once this starts, no one knows where it will end, but you know, I think 50% is a minimum, and I could see markets going down by 70, 80, or even 90% in the coming years. We don't know when it's going to happen. Could start strongly this year. The important thing is not to try to time it, but actually to protect yourself where you still can, because once the markets start going, nobody's going to sell, or they will sell on the margin, but most investors will hold on and wait for the market to correct. And that correction will never be big enough for people to actually sell them. So a lot of investors will ride this market all the way to the bottom. And that's very sad when there is a very good chance of actually preserving your wealth now and turning some of that stock market gain into real money, which obviously is gold, physical gold.
And I find it so interesting, Egon, that we see this big increase in the gold price despite the fact of this massive inflow into crypto, the stock market still at record high. This is really amazing. If once there is a panic in the market, and for sure it will be, in a second I show some insanity charts. Once this panic hits in, we will see completely different movements than now. By now, it's really a calm market, and as you say, nobody is having gold, or only Some crazy people, us included, but far away from any panic.
Well, you're absolutely right. And what has happened so far is this is not a precious metals rally. It's not a speculative rally into precious metals. This is so far we've seen a rally in gold. And that rally in gold is because of geopolitical and world economic events, not because people are now rushing into precious metals, because gold is the king of metals. And gold is now being bought by central banks and by the BRICS countries, because they know that they need to actually hold gold to protect themselves in what's going to happen in debt markets and in currency markets. But general investors haven't actually cottoned on to that because they're still into their stock market investments. And therefore, as I said, it's been interesting. It's been primarily a gold move. I think silver and mining stocks at some point will catch up. But so far, they're way behind because, as I said, this is a fundamental secular change in the gold market and not in the precious metals market. That's what people's got to realize.
Egon, let's have a look at the problems that Joe Sixpack or normal people face. And this is mounting debt. And mounting debt and still relatively high interest rates make it more and more difficult to buy your gold and to take precautions. Here we have the credit cards, new record high above 1 trillion. The mortgage debt also increasing, auto or car loans increasing. And finally, the US total state debt is now at 34.5 trillion. So it's totally out of control. And as we always say, use the time while you still can. It can only become more expensive.
What I mean, these are frightening figures, and they're increasing now. That curve is getting steeper and steeper, which means that debt is increasing exponentially. And we both know that the U.S. deficits are going to run into now annually at trillions. So the debt will grow even further, and as no foreign buyers of U.S. treasuries are interested in holding treasuries anymore, it means that the only one who can actually finance the U.S. extravagances or deficits is actually the U.S. government or the Fed itself. So the U.S. government has to issue the bonds, and the Fed has to buy the bonds. That means that it's just banana republic paper with zero value, and that becomes a vicious spiral with debt going up further and further, and therefore also interest rates will have to go up because no one's going to lend to the U.S. government at these low rates. So it'll be much higher interest rates and spiraling debt. A horrible situation for the world that we are now going to see in the next few years.
Spiraling debt is a keyword, and I'd like to show my last source for today. Here is the US debt for February alone, Egon, and that is worth more than the gold production of a whole year. The deficit in February alone, 296 billion US dollar. And if we compare this to the gold price at 3,000 tons production last year, 207 billion, and this is only the debt of 1 month in the USA. So that was to show you the relationship, how undervalued gold still is.
Yeah, remember, you're saying 1 month was 300 billion. In 1980, total US debt was under 1 trillion, total debt. And here it goes up by 300 billion in 1 month. You can see what's happening to the country. The country is going bankrupt. And of course, since that is still the leading economy in the world, and still, not for long, the leading currency in the world, it means that it's dragging the whole world with it. Because everybody's going to follow what is happening in the US. No one can withstand that, because it's all going to be a vicious chain of events here with domino effects. The world is not understanding this. Gold is still speculating in stocks and properties, etc., and believe that this is just going to continue because it has for such a long time. They don't know nothing else.
And Egon, exactly. And the closer the US comes to the point where the debt becomes unbearable, the higher the chances that there is a geopolitical escalation. And we see this currently. The market is deteriorating, the finances, and concurrently, the tensions are increasing. So that is a really dangerous mixture. So we can only encourage our viewers to take precautions and not necessarily to wait for a setback in the gold price. That might happen, but at least you have to have a foot in the door now.
Absolutely, Jan. And if you know, what we haven't talked about in detail is, the geopolitical situation is frightening. Here you have the biggest economy in the world and the biggest military power still, that is headless. There is a president who's not running the country. He's sadly too old and not capable of running the country. So you have some people, neocons, as we call them, underneath him that are actually pulling the strings, but they're not accountable. But what is happening is also, of course, that the US or the present administration, the Democrats, will not want to see Trump in power. They will do everything they can to stop him. They've tried with the judicial system by taking him to every court and trying to get him convicted in so many different states in the US for felonies that are very doubtful that he's ever committed. And then they know that they have a deficit now, which is of a magnitude that they can't finance. And the only way to finance debts in such a situation and to get people to actually commit money to buying treasuries, that's by starting a war. Then you can raise more money. And this is why the US is now doing all it can to aggravate the situation in Ukraine by directly or indirectly attacking Russia. This is a war between the US and Russia. So we have this prospect, and Trump, I wouldn't be surprised if they actually start a war and blame the war so they can't have an election, because they cannot face having Trump as president. Of course, Trump has said he will stop the Ukraine war in one day by not sending any more money. So that is a very dangerous situation when a political party with no visible leader that has power, because Biden doesn't have the power anymore. That's his underlings that have the power. When they are actually running the world geopolitical situation, and a country which is bankrupt on top of that, that means that we can have very dangerous events coming in this year and thereafter. So this is what investors, we don't know what's going to happen. We only know that the risk is of a magnitude that people have to protect themselves. And this is why we come back to gold. Gold is not a solution to everything. Of course it isn't. It's not going to solve the geopolitical problems. It's not going to solve the world financial problems. But individual investors can at least ensure some of their wealth by holding on to the only money that has survived in history and is not as volatile as stock markets or bond markets or property markets. And that's what people should now think about. Hold some physical gold and hold it outside the banking system. It's absolutely critical today, Jan.
That was a good final statement, Egon. If insane people run the show, then better expect insane results and take precautions. Thank you for today, Egon. And until next month, who knows what we have to talk about then. Thank you, and grüezi to Switzerland.
Thank you. Good to speak to you as always. Thank you.
Thank you, Egon. Bye-bye.
Bye.